All right, these are the stock picks for the week of April 20, 2015. Why do I say these are the stock picks and not show them? I don't know. Here they are. I'm going to go through each of these and explain why they will be good picks for the next week and possibly past the next week. As always, we'll be using two free websites to do the analysis of these stocks, and they are Yahoo Finance's interactive stock chart. Just go to Yahoo Finance, go down to interactive charts, select candlesticks, and go out 1 month. What this does is allows us to see the candlesticks for each day. Once you got that, we're going to go to stockta.com. Oh, what's going on here? Go to stockta.com. This will give us a more long-term picture of the stocks we're putting in, and it'll also give us some additional technical indicators that can help us make decisions for longer-term trades. Now we're going to start with GGB. GGB, I'm going to show you first in stockta because it's a very bullish, bearish stock, but I'm going to make the recommendation to buy it next week. Now, why is that? Obviously, this is not a stock you want to be invested in. Everything here is bearish, bearish, very bearish, and bearish. We have a strong resistance at 3.29 and we're below that resistance. Generally, you do not want to buy a stock that's slightly below resistance. But is it really slightly below this resistance? What is slightly below? Let's take a quick look. We are at 3.05. The resistance is at 3.29. That's a difference of 24. And we're going to divide that by what we're at right now, which is 305. So let's say the stock rises to the resistance. How much ROI did we get on this trade? We would have gotten 8% ROI. Now a down gap, which is what we're seeing in GGB, and I'll show you that here. The down gap tends to fill within 11 days, and we have a down gap. We just experienced one. If this down gap fills, then at the very least, we're going to hit 3.18. So we're going to get more than 10 cents on our $3 investment. Now we do see another gap right here, and whether this is a breakaway gap or an area gap is yet to be determined, but I'm going to say that this is an area gap and it will also probably fill. So we're probably looking at going all the way up to 3.39, which would give us over 10% ROI. So that's what we're doing here. We're going to make this trade. We're going to expect that this gap and possibly this gap fills. If not, we're going to hit that resistance. So we're going to sell at one of those points. We're either going to sell at 3.18. We're going to either sell at that number or the resistance, 3.29. And if we're lucky, we can also sell at 3.39. So those are three options we have for this very bearish stock that we can actually make a decent bullish trade on. And I just use the word option. If you are an options trader, options would probably be a good choice for this trade because you don't have so much risk. You don't have to put so much money into the trade. You can buy a very cheap call option because the stock does not have a very high volatility. Sorry about the throat clearing. Just woke up. We're going to move on to TLT. TLT and TLT. You'll see the rest of these stocks are more or less bullish. We've got a I'm going to take a drink of tea. Give me a second. Okay, much better. All right. All right, this is actually a bond ETF. So if you don't want to buy a bond, you can speculate on bonds prices. This is the 20-year Treasury bond ETF. Now, this is actually a pretty gappy ETF, which is interesting. Most of these gaps are area gaps, so they'll fill. So, for instance, you see a gap right here between March 25th and March 26th. If we were playing on March 26th, we would be bullish and we would buy the stock, and this gap would fill, which it did. So we would have gone from one, let's say we bought it open, we've gone from We wouldn't buy it open here. We'd buy it open here. We would go through from 130, and let's say we see the gap fill on this day, then we would close on this day, so we'd probably close, $1 or $2 higher. So that's a quick, easy trade, and I actually recommend this in the gap game plan if you want to look at that. These are easy area gap trades that are consistent, so you could have done that here. Then at this point, you could have shorted the stock after you bought it, or after you sold it off. You could sell it, then short because we have an area gap again. You'd short it, you would have made some profit, probably here, get out, or possibly get out here, another $1 or $2 profit. Again, we have an area gap right here. You would short the stock, probably one of these 2 days. So you get another couple bucks when this gap fills, which it filled on April 16th. Okay, so this is a ETF you can play gap trades on consistently. And those are good ETFs to play if you've got large amounts of money, or if you don't mind having a slightly more risky strategy of playing options, which can be expensive and have time decay associated with them. But generally, if you're playing options that are far out of the money, it's not far out of the money, far out expiration dates, you don't have to worry about time decay, and you can make more profit than buying stock. I can show you how to do that with another video, so you can actually go back and dig through my video history and find a video on option trades. But that's not what we're talking about today. We're going to talk about just a standard stock trade on TLT. What we're seeing here is something called a bearish or bullish engulfing, where you have a green candlestick eating up a red candlestick. That generally implies the trend's going to be bullish in the future. Now, obviously, this ETF is pretty stable, and it's probably not a good investment because over the past month it hasn't really moved much upward. But if you look at where the support is, it's at 130.74, and you look at the last trade, 131.45, we've just broken that support level, and now, because there's no really strong resistance above us, we can move upward pretty much unlimited amounts. Now, we're trading on bonds, and bonds don't move too much, but regardless, we're going to treat this as a stock, and we've just broken that support level. We have a candlestick that says the coming trend's probably going to be bullish, so we're going to place that trade, make that bet, and hope that it will at least rise to the resistance level where we can make $1 or $2 or $100 or $200 if you're playing call options, and then get out. If it breaks that resistance, though, the sky is the limit, and we'll just stick with this until we see reason to get out. If you notice the other chart indicators, everything is bullish, and because we're making these weekly predictions, we don't need to worry about the long-term bearish indicators. So this is a decent stock pick for a short, we call them swing trades or position trades, where you're trading within a week or you're trading within a couple weeks, like a month. We'll move on to the next one, ALTR. By the way, these bonds probably went up because the market is looking a little bearish these days, and people are looking for safer investments. All right, ALTR is a stock with another bearish engulfing candlestick. We've got a green candlestick eating up a red candlestick. ALTR is very bullish overall. We are above a level of support. We have indicators that are all very bullish except for one, which is the stochastic indicator that tells you whether the stock is oversold or overbought. In this case, it's telling us it's overbought, but that's actually not likely. When you see a stock jump this high, you're almost always going to get a very bearish stochastic indicator, because stochastic indicators only look at short-term trends. So if you see it like this, you see a huge candlestick bringing us to new highs, then a stochastic that's very bearish, you can actually ignore that. However, if you see it kind of like this, where it's slowly going upward, and then we get that very bearish stochastic indicator. That's a good time to get out. Here we have really no reason to get out. We only have reason to get in because of this new candlestick pattern that shows us a coming bearish or bullish trend. We don't see any previous candlestick indicators that tell us that. This one looks slightly like a two white soldiers candlestick pattern, but because of the size difference of these two candlesticks, we didn't make that prediction of the bullish trend. So even though we have this indication that the stock is on the rise, we don't have any candlestick patterns that tell us to get into the stock until last Friday. And now we really do have a good bet on the stock rising. So this is a good time to get into this stock. We're going to move on to the next one, LXRX. This is a penny stock. It's literally 1 penny. And what's interesting about this stock is that okay, in the past we saw this area gap, or not an area gap. In the past, this was actually a breakaway gap. The trend that was up here trading at above 130 broke, and it fell down to start trading at around $1. We have a support level about at $1, and we are above that support level. We have no real strong resistance levels until we get all the way up to 150. Now, this gap actually filled, but we don't have to worry about that. What we do need to worry about is this gap, this smaller gap, which did already fill. So we don't have to worry about that anymore. But once you see a gap like that, and you notice that this stock has a trend of filling its gaps, then you've got to be really careful about the gaps. Now, one worrying thing is this kind of looks like a gap, and for that reason, some people might place a short on this stock. I'm going to say go with the long position, simply because even though most of these days have been short, we now see a reversal. The bearish candlesticks are all above the trading region, and you can almost look at this as a breakaway from where we are trading starting, before April 14. We also have this hammer candlestick that has been confirmed by another hammer. A hammer is when you have a candlestick body with no wick on the top, but only a wick on the bottom. These are called shadows. So if you have a long shadow on the bottom but no shadow on the top, that shows a level of support below you with no real level of resistance above you. Now, if you get that and the candlestick is confirmed by a bullish candlestick, a bullish trend, that's a good time to place a bet on a stock. So I'm going to say get in on this. It's a penny stock. Penny stocks tend to give you a very high ROI if they do rise, if they do break out. And if what we're looking at is a breakout and a return to that original trading level, we can go all the way to 150, which would give us a 50% ROI. Now, I'm not promising anything, but this looks like a decent investment for if you're into penny stocks, and I like to try to include one penny stock for every weekly stock pick video. Next one is AKAM. Nickname ACAM. Again, we generally want to trade at above a level of support, a level of strong support. Here our support is at 71.55. Our last trade was at 71.9. We are just above that level of support. There's no real resistance in sight. Again, the sky's the limit. We've broken new highs. I don't know why I've said breaking twice today. When you're at a high, one thing you want to look at in these chart indicators is the Fibonacci's. The Fibonacci's tell you how that momentum is going to continue. If you have a lot of bullish Fibonacci's, generally you can conclude that you're going to stay high. So what the Fibonacci's are really telling you is that if the stock falls a bit, then for the short term, if you're looking at the short-term Fibonacci's, if the stock falls a bit, then it's going to reverse and retrace that fall. So it's going to go back up. So what we're really looking at is a stock that's at all-time highs that we can trust is probably not going to reverse because of some sort of investor sentiment that the stock is overbought. And because of that, this is a safe investment even though we're at an all-time high, right? The mantra buy low, sell high doesn't always work, especially when we've broken away from a trading region. I mean, if you look at Netflix, Netflix is always at a high. If you look at Apple, Apple is always at a high, but it's usually a good investment. So this is ACAM. In the candlesticks we don't see anything really interesting. Um, so there's really not much to talk about here. Yeah, I see nothing interesting here. So we're making this trade based on a potential for a very large gain due to our support being right below where we are at, and being at an all-time high with good Fibonacci's. So I'm going to put these back up there. These are the 5 stock picks for next week. Please subscribe and you'll get these weekly stock pick videos I don't know how YouTube works. I don't subscribe to anybody. So whatever YouTube does, they will let you know that I have a new stock pick video out, and you'll be able to see them as soon as possible, thereby allowing you to plan your trades for the next week earlier. Please do so. If you have any questions, leave them in the comments below, or send me an email, damon@stockbarometer.com.